Okay, let's unpack this. Imagine a market where cutting-edge digital payments are just exploding, right? But at the same time, for many people, cash is still absolutely king. It sounds kind of contradictory, doesn't it? Today, we're doing a deep dive into Mexico's really fascinating payments industry. We've pulled together an incredible stack of sources for you, everything from deep market analyses, official regulatory reports, to some really interesting cultural insights. Our mission, pretty simple:
Hmm.
distill the most important nuggets of knowledge, help you navigate this dynamic market, its unique challenges, and yeah, its massive opportunities.
Yeah, and what's truly striking about Mexico, I think, is that it's not simply adopting new payment tech in isolation. It's undergoing what you could almost call a dual transformation. The digital and traditional economies, they aren't just coexisting, they're actively converging and, shaping each other. This market really is defined by that dual reality, a robust, definitely accelerating shift towards digital, while at the same time, it's anchored by this persistent cultural affinity for cash and maybe surprisingly for some, for installment-based financing.
Right. And when we look at the numbers, you'll see this isn't just like incremental growth. This market is poised to absolutely surge. For instance, the entire Mexican payment service market, already significant, over $347 million USD back in 2023, is projected to nearly quadruple, think about that, to $1.26 billion by 2035. But that's just the start, really, the truly explosive growth that's in the digital segment. The Mexican digital payment market is expected to jump from about $1.36 billion USD in 2023 to an astounding $8.65 billion by 2035. That's a compound annual growth rate nearing 16%. And real-time payments, get this, they're forecasting an exceptional CAGR of almost 33% over just the next few years. Even the prepaid card and digital wallet market is set to expand dramatically, from around $26 billion USD this year to nearly $47.5 billion by 2029.
And what these staggering growth rates really reveal, it's not just a trend, it's more like a fundamental rewiring of consumer expectations.
Yeah.
Companies aren't just chasing growth, they're strategically building services that resonate with this digitally native mobile first generation. We've seen this pattern in other rapidly digitizing economies, haven't we? So this isn't just about more payments, it's about different kinds of payments. And these differential growth rates, they really underscore that clear ongoing shift.
So what does this all mean for you? Whether you're an investor maybe, or considering entering the market, it means rapid expansion across the board. It signals immense opportunity for innovation, particularly in those specific high-growth segments. But what's actually fueling this incredible shift seems to be a powerful confluence, a mix of tech adoption, commercial expansion, and some pretty proactive governmental support. First, you've got smartphone and internet penetration just soaring. Roughly 80% of the population had internet access as of 2022. And smartphone penetration, projected to hit an incredible 90% in urban areas by 2025. Combine that with, 25% of the population being under 35? You have this massive tech-savvy demographic just ready to embrace new stuff. Then there's the booming e-commerce market. Mexico is Latin America's second largest, and is projected to grow another 30% just by 2024. It's been maintaining an annual growth rate of approximately 30%. That's huge. Companies like Mercado Libre, for instance, they're seeing substantial growth in their payment solutions directly because of this. And finally, you have these proactive government initiatives providing critical support. The Inclusion Financiera program, it aims to reduce the unbanked population down to 45% by 2025. And there's strong government collaboration with the Mexican Banking Association to enhance awareness and accessibility of mobile payment platforms.
So is it just a matter of having all three pieces, the tech, the e-commerce, the government push sort of operating independently? Or is there a specific way they need to interact to really kick things into high gear?
That's a really crucial distinction, actually. It's not enough to just have them independently. They need to work synergistically. Like, imagine a company that only focuses on e-commerce. They'll miss the huge potential of a mobile-first approach, right? Especially when you pair that with a government-backed payment system that's designed specifically to bring in the unbanked. It's the integrated solution that really drives the impact here.
Wow.
Okay, so we've seen this undeniable surge towards digital, but here's where that dual reality we mentioned earlier really comes into sharp focus. Because despite all this innovation, cash isn't just surviving in Mexico, it's absolutely thriving. And it's a paradox worth exploring. Cash accounts for 63% of transactions, 63%. And it's still the preferred daily payment method for a staggering 90% of the population. Now, this is heavily linked to Mexico's large informal economy, which makes up nearly, 25% of the national GDP? And then there's this other thing, the meses sin intereses culture. If you're not familiar, this is a really deeply ingrained consumer habit. It lets people pay for credit card purchases in fixed interest-free installments. It's been a key driver of credit card adoption historically. and it remains a crucial part of how consumers think about buying things.
Yeah, and what's truly fascinating here is that rather than acting as some kind of barrier to digital payments, these traditional habits are, in fact, directly shaping and even accelerating the most successful digital innovations. It's quite counterintuitive. The persistence of cash, for instance, has created this massive market for solutions that bridge the physical and digital worlds. You see this perfectly with OXXO. It's a prime example. It allows customers to complete online purchases by just paying with cash at one of the, over 22,000 OXXO convenience stores nationwide.
Right. And that Mrs. Sin interests culture.
Yeah.
It seems to have perfectly laid the groundwork for a truly game-changing payment solution to really take off.
Are you talking about buy now, pay later? Because it definitely seems like Mexico has become a real hotbed for BNPL services.
It's exactly. Buy now, pay later, BNPL. It's one of the most dynamic and fastest growing segments in Mexico's entire payments industry. Get this, it's the fastest growing payment segment in all of North America. Its growth has just been remarkable. Projected CAGR of almost 35% from 2024 to 2030. Its value is expected to grow from about $2.3 billion USD in 2023 to nearly $27 billion USD by 2030. That's huge. And it's already grown by 78% just between 2022 and 2024. Now, this isn't just about convenience, though. It's directly linked to Mexico's low credit card penetration. Only 15% of adults have one. So BNPL serves as this compelling, accessible alternative for the 42% of Mexican adults who lack access to formal financial services. It gives them a flexible way to purchase higher-cost items. And for merchants, they've seen real benefits, a 20% to 33% increase in conversion rates, a 41% rise in average order value when they offer BNPL. Key players like Quesquetti Pay and Aplazo are really leaning into that Mrs. Sin interest as preference. And there's huge future opportunity, expanding beyond e-commerce into omnichannel retail, maybe with in-store QR code payments.
Right. This ability to not just replicate, but actually enhance a deeply held cultural preference, that's a primary reason for BNPL's rapid success. It positions it not just as a convenience tool, but as a key mechanism for financial inclusion. However, this does raise an important point, maybe a challenge. What about the limited financial literacy among some parts of the population? There is a risk, of consumers not fully understanding repayment terms, which could potentially lead to over-indebtedness if it's not managed carefully.
That's a really valid concern, yeah. And it's definitely something the industry will need to address as BNPL keeps growing like this. But stepping back a bit, how is Mexico tackling this bigger, persistent challenge of nearly half its adult population lacking formal bank accounts in the first place? The barriers, as you can probably imagine, are pretty substantial. Beyond the 49% of adults lacking a formal bank account, only 30% have access to formal credit. That's a big gap. There's also this significant urban-rural divide. Only 22% of adults in rural areas have access to formal financial services, and 97% of bank branches are in urban centers. So the average user is, 7 kilometers from a branch? That's quite far. On top of that, there's this pervasive lack of trust in financial institutions and generally low financial literacy. The average Mexican scores just 58.63% in financial education assessments.
A critical observation here, though, is how the Mexican government and the private fintech sector are actively collaborating to drive change. It really feels like a joint effort.
Absolutely. The Bank of Mexico has been pivotal. They operate SBEI, which is basically the high-speed rail network for all instant digital payments in Mexico. It's their foundational real-time interbank transfer system. Building on that, they launched Cody Cobro Digital back in 2019. It's a QR code-based system for small transactions. It's got about 14 million users now. More recently, in March 2023, they launched DMO, Dinero Mobile, that enables instant bank transfers using just a phone number. And DMO already surpassed 7 million registered accounts in just its first year. Pretty fast uptake.
Yeah, and the differing adoption trajectories between Cody and Demo, they illustrate a really critical point for anyone looking at emerging markets, I think. While Cody's adoption was, let's say, somewhat slower, likely due to user education hurdles and maybe a lack of strong initial incentives, Demo's rapid growth seems directly attributable to its strong backing from major private sector players like BBVA and Santander right from the beginning. This really highlights that public-private collaboration isn't just, beneficial. It's pretty much a prerequisite for achieving widespread success in digital payment adoption.
And speaking of private sector players, fintech companies like Nu and Mercado Pago are also making really significant strides. They're simplifying account opening, providing these frictionless experiences, especially for populations that were historically denied access. But, when we talk about bridging the cash and digital worlds in Mexico, we just have to talk about the OXXO ecosystem. It's actually incredible how OXXO has essentially become the informal bank branch for huge parts of Mexico. I mean, seriously, who hasn't seen an OXXO on seemingly every single corner when they visit?
Exactly. It really speaks to the power of leveraging existing infrastructure and those deeply ingrained consumer habits. With over 22,000 stores and 1,200 municipalities, OXXO has this incredible widespread presence, reaching 80% of the Mexican population within like a 5-minute walk. That directly addresses that physical infrastructure deficit you mentioned earlier.
And they've really innovated beyond just being a convenience store, haven't they? OXXO Pay, like you said, lets cash-dependent folks engage in online commerce, just pay for digital stuff with cash at their stores. Simple. And their own digital wallet, Spin by OXXO, hit over 13 million users in 2024. It processed an average of, 63.2 million monthly transactions? That's a lot of volume. They even have a partnership coming up with Nubank starting January 2025 for cash deposits and withdrawals right there at OXO stores.
Right. So this means the OXXO's ecosystem shouldn't really be viewed as a competitor to these digital-only solutions. It's more like a critical enabling mechanism for the entire digital payments market. It helps solve that classic chicken and egg problem of digital adoption. How do you get cash users to go digital? So for companies taking a hybrid approach, leveraging partnerships with players like OXXO, it seems absolutely essential for building consumer trust and overcoming that physical infrastructure gap to achieve real scale.
That makes perfect sense. Okay, now let's shift gears a bit and turn to the rules of the game. Regulation. Mexico has a foundational fintech law, which is good, but there are also some significant complexities and challenges there. The Fintech Law of 2018, that was a landmark achievement, enacted back in March 2018. It categorizes and regulates fintech activities, providing some much-needed legal certainty. It formally introduced concepts like crowdfunding, electronic payments, virtual assets, that kind of thing. Now, to operate, companies typically need to incorporate as a business corporation and get a license from the CNBV, the National Banking and Securities Commission. That's their COCC equivalent, sort of. But this requires prior approval from an interinstitutional committee, which, from what we understand, is often a complex and pretty lengthy process. However, it also innovatively provides a regulatory sandbox. This lets innovative companies test out new business models under a temporary authorization. That's pretty forward-thinking. Key regulatory bodies you need to know about include the CNBV, Banxico, the Central Bank, the Ministry of Finance, SHCP, the Financial Intelligence Unit, UIF, for anti-money laundering, and CONDUCEF, which protects financial service users.
Yeah, it's a rigorous multi-agency setup. And while that's certainly a high barrier to entry, it does build confidence among investors and users. It signals a strong commitment to compliance, to stability. But here's where we see a really stark contrast, the cybersecurity landscape.
That's right. The challenge there is this fragmented cybersecurity landscape. It presents pretty significant systemic risks. Mexico actually lacks a single comprehensive national cybersecurity law. The rules are kind of scattered across various sectors. And what's particularly alarming is just the sheer volume of attacks. The country faced a staggering 31 billion with a B cyber attacks in just the first half of 2024. That accounted for 55% of all attacks in Latin America. Just staggering. We've seen notable incidents too, like a 2018 cyber attack on the banking sector that caused a 300 million pesos loss, and a July 2023 breach targeting Caja Popular Mexicana. On the data protection side, the federal law on protection of personal data held by private parties was updated in March 2025. It expanded the definition of personal data and transferred oversight from an autonomous body to a governmental one. Plus, there are data residency regulations that require financial data to be stored with cloud providers located in Mexico.
So you have this dual reality, right? A rigorous financial regulatory framework on one hand, and this fragmented cybersecurity legal environment on the other. It creates a kind of strategic dilemma for businesses. While the regulatory stringency fosters consumer trust, the lack of a unified cybersecurity law means companies have to proactively invest. They need robust security protocols well beyond the minimum legal requirements to mitigate these significant operational and reputational risks. Ultimately, security is going to be a key differentiator in this market, I think.
So who are the big players actually competing in this dynamic market? And what's driving investment and Mexico's standing in the region? Well, on one side, you have the traditional banks, BBVA, Citibanamex, Santander. They still control over half the private credit market, and they are actively investing in digital platforms. They're not standing still. Then you have the global players in digital wallets, Visa, MasterCard, Mercado Pago, which leads with over 120 million users across LATAM, plus PayPal, Apple Pay, Google Pay. And crucially, we see these innovative local fintechs and neobanks. Companies like Albo, Aclar, they're specifically catering to young, tech-savvy, and often unbanked populations. And others like Clip and Confio are specializing in solutions just for SMEs, small and medium enterprises. This whole sector is truly an investment magnet. It accounts for over 20% of all venture funding in the country. Startups have secured over $600 million USD recently, and over $3 billion USD was invested just between 2015 and 2022. We're also seeing significant consolidation.
Like Citibanamex acquired a fintech startup in 2023. And Mercado Libre secured $250 million USD in financing from JP Morgan just to expand Mercado Pago's credit offerings to SMEs.
Yeah, that capital infusion, it really signals strong investor confidence in the market's long-term potential. You don't see that kind of money flowing in without belief in the future. And these strategic moves, the acquisitions, the financing deals, they indicate that larger players are actively looking to combine resources and expertise. They want to offer more comprehensive payment solutions. It's definitely a sign of the ecosystem maturing.
Okay. And how does Mexico stack up against its neighbors, Latin America? Well, Mexico is the second largest fintech market in Latin America, nearly 1,000 fintech ventures. It trails only Brazil, which has over 1,500 companies. So significant, but Brazil is still ahead in numbers. A really key comparison that highlights a crucial lesson is Brazil's Pix versus Mexico's CoDi. Brazil's Pix, launched in 2020, has over 160 million users now. It drove digital commerce penetration there to 90% by 2023, just massive adoption. In stark contrast, Mexico's CoDi, launched a year earlier in 2019, saw much, much slower adoption, only about 1.9 million users in 4 years. The lesson there seems pretty clear, doesn't it?
It does.
Yeah.
Pix was deeply integrated with market-leading private banks right from the very start. It demonstrates that deep public-private collaboration is absolutely essential to accelerate these digital payment systems.
Right. And compared to, say, Colombia, Mexico holds a significant lead in fintech size and innovation. It has a tech talent pool about 5 times larger and a much more established startup ecosystem.
So yeah, the success of Brazil's Pix provides that crucial lesson for Mexican policymakers and companies alike. Deep public-private collaboration where all the key stakeholders are really aligned from the very beginning. It's essential. It's needed to accelerate adoption and achieve that widespread impact.
So wrapping this all up, what does all this mean for you? Whether you're an investor, a company maybe looking to enter this market, or perhaps just someone curious about the future of finance?
Well, we've clearly seen the persistent challenges, right? The dominance of cash, the fragmented cybersecurity landscape, the complexities of the new data protection regulations, and that often long multi-agency licensing process for fintechs, and the pervasive lack of financial literacy. That also remains a serious concern that needs ongoing attention. But these challenges, crucially, they create immense opportunities. We're talking about leveraging the explosive growth of BNPL, for example, embracing open finance and APIs to create totally new financial pathways, developing those hybrid and omni-channel solutions like the OXXO model that bridge traditional and digital worlds, capitalizing on the clear demand for cybersecurity as a service in what is, frankly, a vulnerable environment, and, of course, utilizing AI and machine learning for better efficiency and enhanced security. Lots of potential there.
The key takeaway, I think, is that Mexico's payments industry is really a story of dynamic tension. It's this vibrant ecosystem where tradition and innovation aren't necessarily at odds. Instead, they seem deeply intertwined, creating a truly unique and a really high potential market.
Which I suppose raises an important final question for you, the listener, to consider. As digital transformation keeps accelerating globally, how can other emerging markets apply the lessons from Mexico, particularly in bridging that gap between cash-based economies and the digital future, while also effectively managing these complex regulatory environments and very real cybersecurity risks? Something to think about.
A fascinating thought to mull over indeed. We really hope this deep dive has given you a shortcut to being truly well-informed on this exciting and complex